Welcome to The Explainer. All right, today we're tackling a big one, Luckin Coffee. You've probably heard the name. It's the company that famously crashed and burned after a massive fraud scandal, but since then, it's been staging this really remarkable comeback. We're here to figure out if this comeback story is the real deal.
Okay, so let's get right to the million-dollar question, right? After one of the biggest, most talked-about accounting scandals in recent memory, can you as an investor actually trust this company again? And maybe more importantly, is its phoenix-like rise from the ashes a genuine opportunity to make some money?
First things first, to even begin to understand the investment case, we have to get what the business is all about. What exactly is Luckin Coffee's recipe for success this time around?
Well, at its core, Luckin isn't really a coffee shop in the way you might think of Starbucks. It's really more of a tech company that just happens to sell coffee. The whole business is built around its mobile app, and the focus is all on super fast takeaway and delivery. So think efficiency over atmosphere.
In this slide, this just lays it out perfectly. A traditional cafe, right? It sells an experience. It's a third place where you go to hang out and socialize. Luckin strips all of that away. They focus relentlessly on just three things: a totally seamless digital experience, quick grab-and-go service, and achieving massive, rapid scale.
Now, before we get into any of the nitty-gritty numbers, this next part is absolutely critical. We have to understand the lens, the goalposts for this entire analysis, because there's a very specific target in mind here.
See, the analyst isn't just asking, hey, is this a good company? Nope, they have a really clear target: to achieve an average return of at least 9% per year. That number, 9%, is the benchmark for everything else we're about to look at.
And we're not talking about a quick flip here either. This whole analysis is framed with a 16-year investment horizon. So we're thinking about long-term, compounding growth, not just chasing short-term market buzz.
So, here's the crucial point, right? Every single valuation, every risk assessment, every final decision is all designed to answer one very specific question. Can Luckin Coffee deliver a 9% annual return over the next 16 years if we buy it at the right price?
Okay, with that framework in place, let's start peeling back the layers. Let's really deconstruct the business and see how the fundamentals stack up against that goal. How strong is this company really?
So, what's stopping a competitor from just copying them? Well, that's what we call its moat. And for Luckin, it's not some beloved premium brand. Instead, it's like a fortress built on pure operational excellence. They have lower costs, unbeatable convenience through their app, a huge store network, and they use data for literally everything. It's narrow because the coffee market in China is just insanely competitive, but it is very, very real.
Now, this is where things get really interesting financially. You've got this fascinating tension. On the one hand, look at that revenue growth and a strong return on equity. That means it's pretty efficient at making profit from shareholder money. But then, on the other hand, earnings recently dipped, and the profit margins are still kind of modest. It's a picture of a company that's growing incredibly fast, but it's still fine-tuning its profitability engine.
And, we just can't talk about Luckin without addressing the elephant in the room. The new management team is doing a fantastic job, no doubt, but the shadow of that massive fraud still hangs over the stock. The market has a long memory, and that governance risk definitely gets priced in.
So with that full picture in mind, the business model, the financials, the big red flag from the past, let's get to the numbers. What is Luckin Coffee actually worth, according to this analysis?
All right, so the analysts ran the numbers two different ways. First, a discounted cash flow, which basically projects all the future cash the company will make and figures out what that's worth today. And second, a multiple exit model, which estimates what a buyer might pay for it down the road. Both methods put the real value somewhere between $35 and $38.50. Now, at the time, the stock was trading around $33.45, which suggests it's fairly valued, but there's not a huge margin of safety.
A deep dive SWOT analysis, which weighs all the good and bad stuff, kind of confirms this picture. A total score of 7.3 out of 10, that's pretty good. It tells us that the company's big strengths and opportunities, like its massive scale and the growing Chinese coffee market, do have the edge over its weaknesses and threats.
Okay, let's play a game of what if. Looking at three possible futures, we see the base case, the most likely scenario, lines up almost perfectly with our intrinsic value, right around $36. But, and this is important, there's some real downside to $25 if growth stalls out. On the flip side, there's huge upside, maybe even to $50 if the company can really expand its profit margins.
So this is where the rubber meets the road. We've done all this homework, we've run the numbers. Now what's the magic number? What is the right price to pay to hit our goal?
This slide is absolutely key. To hit that specific 9% average annual return over 16 years, the analysis concludes that the price you pay has to be $29 or lower. See, if you buy it at $32, you're only on track for an 8% return, and if you want a 10% return, well, you need to wait for a price of $26.
And what's really fascinating here is that even if you change your timeline, the ideal buy price for that 9% return doesn't really move all that much. Whether you plan to hold it for 5 years or 16, this analysis suggests an entry point right around that $29 to $30 mark is the real sweet spot.
So after weighing all the evidence, the business, the financials, the valuation, the risks, what is the final call? What's the bottom line on Luckin Coffee?
It really boils down to this balance, this tug of war. The opportunity here is strong, no doubt. The analyst scores it a 7.5 out of 10. The growth potential is absolutely there. But the risk, scored at a pretty significant 6.8 out of 10, is also very real. So the opportunity just barely outweighs the risk.
And that leads us to the final verdict. It's a hold. At its current price, it's not a compelling buy if you're aiming for that 9% return. The prudent move, the patient move, is to wait for a better entry point, specifically a price below $29, which would give you that cushion, that margin of safety. So here's what you should really take away from all this. Luckin is a legitimate, fascinating growth story with solid fundamentals, but its valuation right now is fair. It's not a bargain. That past scandal still adds a layer of risk you can't ignore, and all of that means patience is your best friend here. It's a great reminder of that old saying, price is what you pay, value is what you get. And for now, those two are just a little too close for comfort.
Now, I want to turn it over to you. This was a deep dive into Luckin Coffee, but what company deserves this kind of analytical treatment next? Drop your suggestions in the comments below. I love to see what you're curious about, and we might just feature it in our next explainer.